Hi, it's May 28th. This is the BAM Weekly Muni Market Update. I'm Mike Stanton. I'm here with Grant Dewey and Brian Babler from BAM's Capital Markets Desk. Thank you for being here, gentlemen. A relatively uneventful week for munis this week as the market wound down ahead of the Memorial Day holiday. Grant, why don't you take us through what you saw?
Good morning, Mike. Yeah, exactly. Not much action, volatility this week. Muni credit fundamentals remain, clearly on an upward trajectory, so supported by ongoing fiscal stimulus, and we continue to see strong but steady inflows. So we've been operating in an environment for most of the year where the market appears fully priced. The valuations have all been kind of at or near historical lows, but for pretty good reason. So we've had strong, as I mentioned, strong flows into the mutual funds and the ETFs. But we're now entering into the 3 months that are traditionally the biggest redemption months. So, in June, July, and August, investors will receive back $165 billion in principal and interest payments, with the peak redemptions occurring on June 1st next week. So, to put $165 billion in perspective, we only had $175 billion in total issuance year to date, and that's 22% higher than 2020. So, I think the only real obstacle to the market near term is if inflation, sort of continues to surprise to the upside, and we get a sharply higher move in treasuries. So, typically that leads to weaker flows and more volatility in the muni market, although that last cycle earlier in March, we did not see redemptions, but I wouldn't count on that the next time around. So, Friday next week, we get unemployment figures, and then followed by CPI the week after that. So we'll see where that takes us.
And that's probably going to be a multiple month process of really getting that picture complete. I know this morning we saw personal income was down sharply. But some of that's just a reaction to the major increases during stimulus payments earlier in the year. So it is going to take some time for the dust to settle and investors to coalesce behind a longer term viewpoint on inflation. In the meantime, the new issue market presses on. Brian, we did not have another all-time record for BAM this week after last week's huge performance, but it was still a strong week. What kind of transactions stood out to you?
Yeah, it was another strong week for BAM, and Grant hit the nail on the head. It was a manageable supply week overall. I think total supply ended up right around 8 billion. Most of that being on the exempt side at about 7 or so billion. That's after expectations were plus or minus 7 billion leading into the week. So a little bit more came to market than was anticipated. But generally speaking, ahead of the long holiday weekend, it was received pretty well. Market remained constructive, and deals priced pretty efficiently. But BAM had another great week. Again, not quite a record-setting week, but over 430 million par insured, which is a very strong result for us. So we were very pleased with that. Some of the highlights from this week were 71 million. For Sanger USD in California. That was an A+ rated deal priced by Stifel. 44 million of a tax increment financing for the city of Temple, Texas, was priced by Piper, which carried a Baa2 underlying rating, and 30 million for the city of Port Arthur, Texas, which was priced by Loop and had an A+ underlying rating. So very strong week overall, particularly as well in the competitive market. We were very active. There were a lot of deals priced and utilized BAM insurance. And we anticipate similar kind of results next week. Market will slow down given the holiday shortened week, anticipating probably around 5.5 billion or so in total supply. Most of that's on the negotiated side. I think the competitive market is right around 1 billion, but that's actually the competitive market will be pretty active, but with smaller deals. So there's going to be a lot of deals pricing, just nothing of really large particular size. But BAM's activity will likely be highlighted on the negotiated side by 34 million issuance for Jefferson County, Indiana Building Corporation, followed by about 19 million Port of Huron, Michigan, and 18 million Soledad USD in California. So we'll have an active week. We're anticipating probably north of 150 million out of the gate, and we'll see where that supply takes us.
And we're continuing to see a lot of discerning underwriters using insurance where it makes the most sense. So you're not seeing necessarily across the entire transaction, but they will find the maturities where it makes the most sense. And there's also, of course, an active secondary market and some of the recent new issues where investors may have seen an issue come to market without insurance, but they want to hold it with insurance in their portfolio, so they can actively add that after the fact. So any new developments on that front, Grant?
Yeah, well, in that regard, we did have close to a record week. So, yeah, and as you point out, we continue to see it on a little bit higher rated transactions, probably given, makes a lot of sense there, given some of the rate compression. So, the University of Florida deal where there were some investors that utilized insurance in the aftermarket or the secondary market. And so we're continuing, despite kind of the environment that I described, we continue to see, an increase in penetration rates. I think a lot of that does have to do with the fact that there's a larger percentage of AA category bonds being wrapped than we've seen in the past few years, and so that's a positive trend for our industry, and the secondary continues to be a robust area for us.
And you're certainly always available to answer calls and answer questions from the market for anybody's got a holding that they're interested in insuring.
EAEBLER. And anyway, thank you, Mike.
Thanks for your time. Have a great weekend.
Okay. Bye-bye.
Thanks, Mike.
When the market is unpredictable, BAM gives you certainty. In the face of volatility and illiquidity, BAM insured municipal bonds deliver default protection, value preservation, and a durable AA rating from S&P. BAM's insurance protects against everything that causes a default, including natural disasters, financial fraud, pension issues, and economic disruption, like the one we're experiencing right now. BAM. Build America Mutual. Ask your broker about BAM insured municipal bonds.